Good morning, traders. Good morning, traders. Sure you had a blessed weekend. You're welcome to today's market and outlook session. If you can hear me loud and clear, please drop a comment. If you can hear me loud and clear, drop a comment. Also confirm you can see my screen. I'm currently viewing our JPY basket on TradingView. So confirm you can see my screen and you can also hear me loud and clear. How is your trading business? Hope it's been profitable. Good morning, Mr. Emmanuel. Good morning. Thanks for joining. I think it's your first time joining. Thanks for joining. Please confirm you can see my screen and you can hear me loud and clear. If you have any question, if there's any pair you want me to analyze, please let me know in the comment section. If there's any pair you want me to analyze, let me know in the comments section. So let's go straight to business. So we'll start by looking at the fundamentals for the day. So start by looking at the fundamentals. Today is 26th May, and there are no major news. Okay, there are no major news. Today is 26th, no major news. So our focus will be on the technical since there are no major news. Okay. All right, thank you, Mr. Emmanuel. Thank you. Okay, so if there's any question or you have any pair you want me to analyze, please let me know in the comment section. There are no fundamentals for today, so we'll go straight to the. So we'll start by looking at dollar index. Okay, we use the dollar index to define the strength, to know the strength of the dollar. And once you're able to define the strength of the dollar, you're able to know the trend on the dollar, if it is bullish or bearish, you would be able to know what trades to execute on major currency pairs. Okay, those are pairs that have on dollar as the counter or base currency. Okay, so let's start with DXY. That's the application for dollar index. So as you can see, let's start with the daily time frame, or let's start with the weekly time frame. Last week, the dollar was strongly bearish last week. It was strongly bearish last week. And long term, the dollar is still bearish. But I think after strong bearish move last week, you should expect a little retracement on the index. That's my expectation on dollar index this week. You should expect a little retracement. Okay, so this is what we have on weekly. Price just tested. We had a support here. This is a support area. Okay, the liquidity that was residing at this low has been cleared, and let's see what we have on the daily. So you can see what we have on a daily. So if today's candle closes as an hammer or an engulfing pattern or a doji, we should expect a pullback on dollar index. As you can see, this drop, I think, was to clear the liquidity residing at this previous low. Also, if you go down to 4-hour time frame, I think a fair value gap was created at this point. And let's see if that fair value gap has been filled. Let's see. So on 4-hour, you can see on 4-hour at this point, there was a fair value gap. You can see the fair value gap that it created at this point. So you can see price has filled that gap. You can see price has filled that gap, and there's a strong from that area, from that zone. You can see that there's a strong rejection. So let's go down to 4-hour. As day traders, we work with the 4-hour time frame to see. Let's see the pattern we have on the 4-hour. So you can see what we had on 4-hour. The previous candle looks like a spinning bottom, and this bullish candle closed above the high of this bearish candle. This tells me that demand is increasing. Tells me demand is increasing, and when demand is increasing, you should be looking for buy opportunity. Okay, so that's what I see playing out on the dollar index. So at the moment, my bias for dollar index is bullish. It is bullish. So we have this swing high here. I would like to see dollar index pull back, you can see we have a fair value gap here. I would like to see dollar index pull back, and this is a premium area. Is a premium area, and that this premium area have a fair value gap. So there's a high probability dollar index would come fill this gap, or it would pull back to retest this broken resistance turn support. This broken resistance turn support. So these are the areas I will be considering selling the dollar. Okay, this is where I will be considering selling the dollar. But at the moment, my bias is bullish. Like I said, the long-term bias for the dollar is bearish. It is bearish. Okay, so if you are buying the dollar, what you're actually doing is trading the pull back. Okay, you're taking advantage of the retracement. Okay, long-term, the dollar is still bearish. As you know, price does not just move in a straight line. Its movement is not in a straight line. It's zigzag. Okay, there would always be retracement in an upward trend or in a downward trend. Okay, so let's go down to 1 hour. Let's see. So you can see on 1 hour, if you want to buy dollar today, you can see on 1 hour it has created a fair value gap. Can you see the fair value gap on 1 hour? It has created the fair value gap. You want to wait for price to pull back, fill the fair value gap before you buy the dollar. That's my take on the dollar for today's market. Okay, wait for, you can see this fair value gap it's created. Wait for price to pull back before you consider buying the dollar. That's my take on the dollar. Let's see what's happening on 15 minutes. Let's see if there's shift in market structure on 15 minutes. So you can see what we have on 15 minutes. So there's a meeting here. You can see that. This is mitigation. You can see this. You can see this mitigation level. Okay. Then shift in market structure occurred at this point. You can see this candlestick closed above this high. So after shift in market structure, you want to see price pull back to this fair value gap. So this will be a good area to consider buying the dollar. I hope that is clear. So my bias for the dollar today is bullish. It is bullish. Okay. So let's look at Japan JPY basket. We use that to define or to determine the trend of Japanese yen. Okay, we use the yen basket to know the strength of the yen. Okay, so far yen has been bearish. See, it's been bearish since the market opened. Let's start with the daily, so you can see it. So you can see it's been bearish. You can see it has been bearish, and I think price, there was a rejection from value gap. Let's go down to lower time frame. See, so you can see what we had on, so liquidity gap here. You see this fair value gap. You can see this fair value gap here. Can you see this fair value gap is created here? Price has already filled that fair value gap, and you can see there was a strong rejection. So price filled the fair value gap and went ahead to test this resistance and also to clear the liquidity residing at this previous high. You can see, and immediately that was achieved, you can see what happened. So at the moment, Japanese yen is bearish. It is bearish. Yen is weak. Is weak. You can see the market is trading below the low of this bearish, this last bullish candlestick that formed before this retracement. And also you can see shift in market structure at this point. I think the market is below it, right? On this 15 minutes, okay, I think, yeah, this candle below it. Let's confirm that on 1 hour. Let's see that on 1 hour. You can see this 1 hour candle close below the low of this candle. So that's a shift in market structure. That's a shift in market structure. I want to wait for price to pull back, probably to fill this fair value gap it's created, okay, before you go bearish. So for today's market, my bias for the yen is bearish. Okay, but you might want to wait for price to pull back to this zone before selling the yen. I hope that is clear. I hope that is clear. Good morning, Mr. Joseph. Good morning, Mr. Abubakar. Good morning. If you have any question, any pair you want me to analyze, please let me know in the comment section. Let me know in the comment section. What pair are you considering trading today? Let's look at it together. Okay. So that is for the yen and the dollar index. So let's look at currency pairs. We'll start by looking at GBP USD. So if my bias on dollar index is bullish, I should be looking for sell opportunity on GBP USD. Okay, so weekly time frame. Last week was strongly bullish. Strongly bullish last week. I made some good money on GBP USD last Friday. I made close to 80 pips. Yeah, 80 pips on GBP USD last on Friday. So today I'm considering selling. Okay, I'm considering selling GBP USD. You can see what played out last week. The liquidity residing at this previous high has been cleared, and I would expect price to pull back to fill the fair value gap it created. You can see it has created the fair value gap. You can find that on daily and 4-hour time frame. You can see on the time frame we had a fair value gap. Also, there was a breakout of the resistance here. After a resistance, price is right to retest that resistance level, which has become a support. So also, if you apply your Fibonacci, let me use a 4-hour time frame. If you apply your Fibonacci, and for those of you who use indicators, if you apply your RSI indicator or stochastic indicator on the chart, I'm sure GBP USD is overbought, is at overbought level. Okay, we'll confirm that in a few minutes. So you can see we have, this is a swing low on GBP USD, and this is the recent swing high. Okay, so the price pull back to a discount area. This will be our discount area. And at this discount area, I would like to see price fill this fair value gap. This will be a good area to consider buying GBP USD. Okay, if you are considering selling, you can sell to this zone. Okay, you can sell to this zone. So we also had a resistance here which became a support. So if you are considering selling, you could sell to this zone. Okay, that's my take on GBP USD. You could also target this fair value gap, but I think GU has a higher probability of coming for this fair value gap because it's in confluence with this mitigation block. Okay, I think it's in confluence with this mitigation block. So I think this would be a good zone to consider buying USD. So today, tomorrow, I'm looking for sell GBP USD. And I think it's set for sell. It is set for sell. But let's see what we have on 1 hour. Let me share with you my entry level for GBP USD sell today. So this is where I'll be considering selling GBP USD. See 15 minutes. So I want to see, you can see that's created structure. Can you see it? Shifting market structure. And it has created the fair value gap here. So I would like to see price pull back to fill this fair value gap. This is where I will be taking my sell on GBP USD. Okay, I want to see price pull back to fill this fair value gap before going bearish on USD. I hope that is clear. If price doesn't pull back to this zone, and then there's no trade for GBP USD, I wouldn't be taking a trade on GBP USD. Price should pull back to this zone for me to sell GBP USD. I hope that is clear. Australian dollar card. Okay, Mr. Mayor will look at Australian dollar card in a few minutes. Okay, so that is it for GBP USD, and I think the pattern we have on Euro USD is similar to what we have on GBP USD, and that's because both pairs are positively correlated. Okay, both pairs are positively correlated. You can see the pattern we have on Euro USD is similar to what we have on GBP USD. So I would like to see price pull back. You can see that's created a fair value gap. First shifting market structure occurred here. Shifting market structure has occurred at this point, and you can see the fair value gap it's created. So I'd like to see price pull back to this fair value gap before joining the sell on the bearish move, before taking a trade on Euro USD. I hope that is clear. That is my take on Euro USD. Okay, look for sells after price pulls back to this zone, then you can sell Euro USD. And if you are selling from this zone, your stop should just be few pips above this level. I think that shouldn't be more than 20 pips. If you are risking 20 pips, you go for at least 40 pips profit, 40 pips as reward. That's 1 to 2. Okay. Any question on Euro USD and GBP USD? If you have a contrary view, let me know in the comment section. I'd like to know your bias on Euro USD and GBP USD. Okay, let me know in the comment section if you have a contrary view. I'd like to know. Okay. Australian dollar card, few minutes. Okay, let's look at gold. Let's look at gold. I know most of you trade gold, so let's look at gold. So gold has been bearish. I expected that on gold. Okay, I expected that move on gold. So far, gold has been bearish since the market opened. It has been bearish. So if you go down to 4-hour time frame, the close of last week, that was last Friday candle. If you go down to 4-hour, we had a pattern on 4-hour time frame. So you can see the pattern we had on 4-hour time frame. So I'm not surprised gold is bearish at the moment. I'm not surprised. You can see the pattern we had on 4-hour time frame after the close of the Friday candle. You can see we had a shooting star, which indicates change in trend from bullish to bearish. You can see that from bullish to bearish. You can see that. So it's created. Okay, so it can be bearish. It's been bearish, and gold is still bearish. I think gold is aiming for this fair value gap. If gold will reverse, there's a high probability it will come fill this fair value gap before going bullish. That's what I see playing out on gold. Gold is going to come to this zone. Okay, but I would not advise that you take it now. Okay, don't take a sell. You can see it has created a fair value gap here. Market structure has occurred here, so you want to wait for price to pull back. If you sell market price, the risk will be very high. Okay, and to be consistently profitable, you want to ensure that your risk is less compared to your reward, right? So best you wait for price to pull back to fill this fair value gap. This would be a good area to consider selling gold. Okay. Also, we had a fair value gap here on gold, which has not been filled. Said it at this point, we didn't fill it entirely, so gold could also pull back to fill that fair value gap before. So these are the two areas you should consider selling gold. Now, the candlestick pattern that forms after this fair value gap gets filled will determine if you should go bearish. So if price breaks out from this fair value gap, then it's aiming for this fair value gap. Okay, so the candlestick pattern that forms after the gaps get will determine if you should go from zone or from this zone. I hope that is clear. So that's what I see playing out on gold today. Though gold long term is still bullish. Long term is still bullish on gold. So if you are selling gold, you're trading, you're taking advantage of the retracement. Long term, gold is still bullish. I think gold is going to come from liquidity residing at this high. That is my expectation for gold. Okay. Gold is coming for this high. There are a lot of others residing at this previous highs, and I'm sure gold goes before going bearish. Is that clear? So that's my take on gold. So let's look at Australian dollar card. Australian dollar card. This is the weekly. Okay, so on the weekly, what do I see on the weekly time? You can see price has pulled back. We had a fair value gap here. Price has pulled back to fill that fair value gap, and you can see the pattern that formed after that fair value gap got filled. We had a spinning top, a bullish spinning top, and the next candle closed. This tells me Australian dollar card is bearish at the moment. Okay, this is on the weekly time frame, but let's go down to daily time frame. Okay, so on a daily time frame is what we had on a daily time frame. So last Friday candle, you can see it's an inverted hammer, and this inverted hammer formed at a support. Uh, a support here. You can see we had a support here. So that inverted hammer formed at a support level, and we also had a fair value gap here. We also had, you can see this resistance also turned support. So this is a key support area. This is a key support area. So we have this fair value gap it's created here. So I think I'll be going with the daily pattern. So with what we have on a daily, I think Australian dollar card will be bullish today, but weekly is bearish. For today's market, if I'm going to take any trade on Australian dollar card, it will be buy, okay? It will be buy. So let's go down to 4 hour. Let's see the pattern we have on the 4 hour time frame. So you can see what we had on the 4 hour time frame. We had an inverted hammer here. The next candlestick closed bullish. It closed bullish. And I like to see price close above the high of this candle. And you can see this candle closed above the high. Okay, and I think if you go down to lower time frame, a fair value gap was created here, and that could be the reason for this retracement. Let's go down to 1 hour. I'm sure a fair value gap was created. So you can see on time frame, you can see we had a fair value gap here. Can you see that fair value gap? And that could be the reason for the retracement. You can see the fair value gap. You can see the fair value gap, right? You can see the fair value gap it's created. So price pulled back, filled that fair value gap. So this would have been a good entry. After price filled this fair value gap, this would have been a good entry for buying Australian dollar card. It would have been a good entry after the close of this bullish candle. Okay, so I think at the moment it's bullish. Let's just confirm the shift in market structure on a lower time frame. So you can see on 1 hour time frame, you can see we had this was a breaker. This liquidity residing at this low was cleared. This was a breaker, and after price cleared liquidity, you want to see shift in market structure. So at this point, you can see this candlestick closed above the high of this candle. That's a shift in market structure. And after shifting market structure, you want to wait for price to pull back to fill the fair value gap that it created, and that has played out here. So with what I see on Australian card for our time frame, I would rather go for buy than sell. I'd rather go for buy than sell. So you might want to wait for, you can see it created a fair value gap here. So you might want to wait for price to come fill this gap before you buy. Okay, depending on the candlestick pattern that forms. Okay, the candlestick pattern after this gap gets filled will determine if you should go bullish on Australian dollar. That's my take on Australian dollar. We go on GBP USD and let's see GBP USD. So this is the trade I took on Euro card this morning. I sent to the VIP group. I took a buy. My stop loss, you can see everything I sent to the VIP group. So you can see my stop loss. I'm risking 30 pips and I'm aiming for 60 pips. Okay, so I think that will be the only trade I'll be taking today. Euro. Okay, so buy. This is my TP. This is my stop loss. Okay, so like I said, if you apply, for those of you use indicators, GBP USD, if you apply, go to daily. If you apply your indicator, stochastic or RSI, let's see stochastic, stochastic indicator. Sure, it's overbought. So you can see that the stochastic indicator is above level 80, and when this line is above level 80, it indicates that that asset is overbought, and at overbought levels you should be looking for sales. Is overbought. Okay, if you apply RSI, both indicators serve the same purpose. RSI and stochastic, they serve the same purpose. So you either use RSI or you use stochastic to know when an asset or an instrument is overbought or oversold. So let me apply RSI, relative strength index. So you can see also, you can see RSI is also overbought. You can see it's overbought. You can see that You can see that is at overbought level 70. You can see that. If you go to weekly, let's see what we have on the weekly. You can see on the weekly also, you can see is above level 70, and you can see stochastic also is above level level 80. So all you need to wait for is a bearish reversal pattern to form on a 4-hour time frame or 1-hour time frame. Okay, you can see what we have here. This is a bearish reversal pattern. We had a spinning top, a bullish spinning top, and the next candle also closed as a bearish spinning top. So this tells us that there's a high probability for GU to sell. And with your indicator, you can see price is at what? Overbought. You can also see here, this is a 4-hour time frame. Both indicators are at overbought level. So it will be risky for you to buy GBP, all these indicators at overbought level. I hope that is clear. So as is for GBP USD, look for sales, Euro USD sales. Okay, let's look at USD JPY. USD JPY is going to be bullish because the yen basket is bearish. Yen basket is bearish, so we should expect USD JPY to be bullish. Okay, so if I'm to take a trade on USD JPY, okay, so you can see, so if today's candle closes bullish, as you can see, price dropped, tested this, you can see this support. You can see that we had a support here. This is a demand zone, or you call it a support zone. And if you go to 4-hour, I'm sure a bullish reversal pattern has formed on 4-hour, indicating change in trend. Okay, so you can see on 4-hour, you can see the pattern we had on 4-hour. This is a doji, right? This is a doji. And after the doji, you can see the candlestick that formed. It's engulfed, it closed above the high of the doji. That tells me that demand is increasing. Demand is increasing. So I would like to see price pull back. I'm sure it created a fair value gap. Let's see. You can see it created a fair value gap on 1-hour time frame. Fair value gap it created. So I would like to see price pull back to this fair value gap before buying USJP. That's my take on USJP. Okay. So if you apply your Fibonacci from this swing high, swing low, this is a swing low. You want to see price pull back to a premium area. You don't sell at discounts. You sell at premium, right? You sell at premium. You buy at discount. So you want to see price pull back to a premium area, and premium area we have a fair value gap here. You can see. So this would be a good area. Okay, if you are selling, like I said, this market, it's okay, it's a buy. So if you are buying, you could set your TP at this area. Okay, you could use 143, the low or the high of this fair value gap. You could use that as your take profit. Okay, but like I said, I would like to see price retraced, fill the fair value gap it's created on 1-hour time frame before buying USD JPY. Mr. Abdurrahman, you have to work with a time frame that suits your personality. I don't know what strategy you're trading with. Okay, I don't know what strategy you're trading with, but if you're a trader, your entry should be a 15 minutes or 1-hour time frame. Okay, your entry time frame, if you're a day trader, should be 15 minutes or 1-hour time frame. Okay, Mr. Abubakar, use 15 minutes or 1-hour time frame as a day trader. So this is 4-hour time frame. You can see that price is at a extreme discount. If you apply your Fibonacci from this swing low, or you walk from this swing low to this swing high, you can see that price is at extreme discount. Extreme discount. And if you apply your stochastic or RSI indicator, price is oversold on USDJPY. You can see it. It has crossed level 80. You can see it's oversold. Go to daily also, you can see it's oversold. Go to weekly also, you can see on the weekly time frame also it has crossed level 20. So that tells you USDJPY is oversold. is oversold, and you don't sell at oversold levels. You buy at oversold and you sell at overbought levels. Okay, so if you are considering selling, you want to wait for price to pull back before you sell, because the indicators are at oversold level. So you want to wait for price to pull back before you sell. I hope that is clear. I hope that is clear. You have any other question, let me know in the comment section. If you are yet to give the video a thumbs up, please do give the video a thumbs up if you haven't done that. And if this is your first time joining the live stream, please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. You don't want to miss any of the sessions. So just subscribe to the channel so that you get notified by anytime I come online. Do you have any question? Is there any other pair you want us to look at? Let me know in the comment section. Do you have any question? Do you have any question? Do you have any question? If you want to have access, you should register an account, open an account with Oral Market and fund it with a minimum of $200. To have access to VIP signals, open an account with Oral Market and fund it with a minimum of $200 and you'll have access to free signals. Any question? Any question? Any question? Any question? Any question? Any question, Mr. Emmanuel, Mr. Joseph, Mr. Abubakar Mayor? Do you have any question? So it appears there are no questions. So that will be all for today's session. I want to appreciate you all for your participation, and I look forward to having you in the next class, which will be tomorrow by 10 a.m. Till then, keep winning. Bye for now.